Hello and welcome to today's market snapshot. I hope everyone had a great weekend. My name's Craig Erlam, Senior Market Analyst at OANDA. Today it's been a relatively quiet start, as you'll see from the economic calendar, which we'll touch on to begin with. We've only had a couple of pieces of data from China overnight, and aside from that, it's been very, very quiet on the economic data and events side of things. The data from China overnight was a little bit disappointing, really. Industrial production slightly beating expectations, but really no change from last month. We saw some disappointing data from the urban investment and retail sales point of view. Really, given the transition that we're seeing in China, what we're looking for, hopefully, is for retail sales to take up some of the slack, or consumer spending, I should say, to take up some of the slack left from the slowdown in things like industrial production, in so manufacturing, and also in areas such as fixed asset investment. But in reality, we're still seeing that lack a little bit, and this is what we've seen from the data. The data really has set the mood to an extent overnight. Although if we look at the markets now, you can actually see that much of the moves in the markets really do just reflect general risk aversion, and again, that's not just driven by the data in China overnight. I do think that's potentially contributed to it, but really I think primarily what we're seeing in the markets is just overall risk aversion. We've got some key risk events now to come for the next couple of weeks. We've got, of course, the UK referendum next Thursday. We've also got the Fed meeting on Wednesday, Bank of England on Thursday, Bank of Japan on Thursday as well. Lots of data to come this week. We've got US retail sales, we've got US inflation data, we've got the UK jobs report, UK inflation data, among many other pieces of a number of other economic events as well. So it's going to be a very busy week. Well, it's going to be quite a busy couple of weeks, really, and given the number of events that we've got and the number of key risks, particularly, like say, the Brexit vote, I think we could potentially continue to see this kind of risk aversion. European indices trading around between 1 and 2% lower, US futures pointing around 3 or 4/10% lower as well. We're also seeing things like the yen being favoured again, being the safe haven currency that it is. The pound sterling is taking a bit of a hit again today. The polls which we've had in relation to the referendum, nothing really much has changed. They're still showing neck and neck. I think the big change today comes in terms of the betting odds. Now, betting odds is something which I've touched on previously. People looking more towards the betting odds for an idea of how the referendum's going to go, because they've been far more accurate in the Scottish referendum and the last UK election campaign. And what we're actually seeing is the gap closing, even in the betting odds, between Remain and Leave. Now, the odds still show a significant still show the Remain side significantly ahead, but the fact that the gap is closing is likely to make people nervous, and I think that's really what's leading to the weakness in the pound today, and again that little bit of risk aversion which we are seeing in the markets. We're continuing to see bonds pairing their gains. Now we are seeing yields on French, Italian, German and Spanish debt creep a little bit higher, but given the moves which you've seen in these over the last couple of weeks, it's not too much of a surprise to see them starting to pair the gains. We are seeing some small declines in oil, and this comes off the back of the oil rig count on Friday, when we saw the number of oil rigs in the US actually rise by 3. This is the second consecutive week now that we've seen an increase in the oil rig count, potentially suggesting that with these higher oil prices, that some of these lower cost rigs which we were forced to move offline are actually starting to come back online. So again, this is only 2 weeks, we can't read too much into it. The fact that we've seen 2 consecutive weeks is potentially a sign that we are going to start seeing more and more oil rigs come on, which may put a bit of a ceiling in place for oil prices. It could also be a case of oil pairing its recent strong gains, but the fact that both WTI and Brent are back below $50 a barrel now does suggest that we are starting to find a bit of a ceiling at this stage. Aside from that, like I say, it's been a very quiet day. The rest of the session is expected to be relatively quiet as well. Some massive events to come this week, so I think it's going to be an extremely busy one for the markets. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.